Alright, so I'm going to cover the use of bar volume, how to use it effectively for intraday trading, intraday day trading. First thing you need to understand is that bar volume is different intraday than it is on a daily chart. On a daily chart, you can read bar volume day by day, but intraday, you cannot read it bar by bar or hour by hour. It's not going to work. All right. So what do you use bar volume for intraday? First of all, I'd like to mention that it's extremely important, and it has a use, but that use is in outliers. All right. Now, what do I mean by outliers? I mean by extremely high volume at the end of a swing. All right, very high volume. That's meaning it's not like average volume. Very high volume at the end of a swing. That's how you use intraday bar volume to identify stopping action. And I'm going to give you examples, even today, just today, so you can see how it works out today. All right, so the way you use bar volume is to identify outliers. Outliers meaning very high volume. That's the outlier, being very high at the end of a swing. All right, so what happens typically? You see this. You have your volume, and then bang. So this right there is going to stick out. And then what happens usually, you'll find that it has the reversal. All right, now you have to combine this. You can't just use it willy-nilly. You have to use it at levels. All right, it can't just be used arbitrarily. All right, so now let's take a look at examples today. Nothing cherry-picked. All right, so this is an example. All right, and basically the high volume. And the other thing to mention is after the high volume, you should have a break or an extremely strong wave. You should have a break or an extremely strong wave for a reversal. All right? You can't just have high volume and just hanging out. It needs to be like this. So for example, in copper, there was some over here, but I want to see a downtrend. So this is a sideways. Now it's downtrending. And then it hits right here with the biggest volume and at least 18 bars, which isn't that much. Usually it's much higher. But you can qualify it by taking a look at the percentage of volume. So it's stick out, but also this is bigger than 2.6 times the average down volume. 2.6, double, 260%. All right. So you see that it is at the end of a swing, high volume at the end of a swing, high volume being the outlier, and qualifying it to terminate the move at the end of a swing. And then that's the first qualifier. Second qualifier is a strong reversal, typically a break. All right. Now I don't know how much it's going to pull back. Eventually it'll reverse. I think it's going to reverse here. We'll see. It really pulled back a lot. You know. So that is what's important. It sticks out like that. That's the outlier. In terms of count, it's not that big, but in terms of percentage, it's 2.6 times average down volume. In terms of count, it's the biggest in about 18 bars. And then that's the first qualifier. And I use count as well as percentage. And then you know, the reversal. So it's demand. All right, now let's take a look at a couple of more examples. Take a look at how gold reversed today. So gold, remember this is stopping action. All right, so it goes down, down, down right there. That stopped the downtrend. This is, in terms of percentage, it's only 1.7, but in terms of count, it's the biggest volume in 100 bars. That's a lot. So when you see that, the downtrend, it temporarily stops, and one of two things happen. If you have demand, then it's a possibility that it's going to reverse and go back up. Or it's going to go sideways before the next leg down. Right? Here it looks like it was more of a sideways movement followed by the next leg down. Right? If it was in an uptrend, look for this, pull back, test, and goes up. We know one of two things. When this happens, the downtrend stops. Now what? Will it reverse, or will it move sideways until it continues lower again? So let me give an example in energies. Ooh, you got supply. Look at that. Uh-oh. So, let's see. So this was, I guess there was some climactic action here. And then up here, on that bar, the volume was the biggest in 49 bars. What happened after that? Supply came in, took it down until demand showed its strength. So this time, stopping action led to a reversal until it went to a key level where it was bought and demand came in. And that demand got stuffed right here, stopping action right here. It's the biggest in 100 bars. That led to selling. So this is not a good sign. Remember, when you have stopping action, it stops an uptrend or a downtrend, and then it either there's a reversal or there's sideways movement and then continuation. So in this case, you had selling pressure come in, and now we're going back down. Sell, back up. Now 48-minute down rally. Chances are market is going to go back down. Supply's in. All right. look at nat gas. So nat gas, you have down, 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 down. Right here, you have biggest in 100 bars. Right there. Leading to demand. Alright, so that is your stopping action. That's your stopping action. That stops the downtrend. Here's your downtrend. Stop the downtrend, rally the other way, pull back to test, and go higher. You see? So now what's the point? The point is that bar volume can be used to identify stopping action. What is that? Stops the trend and leads to a sideways trend or a reversal, trend reversal. Bar volume can be used to identify stopping action, which is your climactic action, which stops the trend and leads to a sideways trend or a trend reversal. Those are the two scenarios. One, sideways. Two, reversal. Now, how do you know which one's going to be, which one's going to happen? Is it going to be sideways trend? Is it going to be a reversal trend? So, a lot of times it's a reversal, but you have to just take a look at, a higher time frame and get the picture from there. So that's what happens. All right. Now what to look for after stopping action? What do you look for? You look for a change of behavior, which could be strong demand, like I showed you, or supply. All right. So here, demand. Sometimes it happens at the prior wave. So it might be like sometimes it'll be here. And it'll retest and then happen. All right? But whatever it is, who cares? The point is that what do you look for after that? You look for demand. And if it's in an uptrend, right? What do you look for? You look for supply. I'll give an example of that. Take a look at the NQ. And this is all from today. Right? The NQ, you had supply. It didn't come exactly from the top here. On the top bar, it came after the top bar. But on this counter trend up, it came right here. It appeared right here. That selling was preceded by a break, and that selling was the biggest in 57 bars. See? No, I don't think I see anything else. This one at the top here, these are smaller numbers, so they can terminate a swing. Like right here is the biggest in 15, terminated this swing. This terminated this swing. You know. That was the biggest in 4, terminated this swing. But if you want trend to terminate, usually the numbers are quite high, like 57. You know? This was the last minor climax here that led to this move up, which finally encountered resistance. You see the volume spike because it encountered supply, and then it was game over. Right? And yeah, majority of the time, though, you'll have a very nice intraday move, and you'll see this a lot. You'll see this a lot. If you're looking for changes of behavior or change of character, you will get this a lot. Climactic action here. And that will lead to a move. Right? So that's all. Take care. Bye.